Hello everyone, and welcome to the channel. So, let's start with something simple. You open your gas bill at the end of 2025, or maybe you're already looking ahead to 2026. The number stares back at you. Not as bad as the shock in 2022, not quite, but still higher than it should be. You see what I mean? The leaders, they talk about crisis over, under control, renewables rising, storage full, but deep down, it feels different. The system, it's not fixed, it's patched. And patches, they hold for a while. Then they tear. Today, we go deep into this. Europe's gas story, not the headlines, the real one. From the flows in 2025 to what 2026 might bring. We'll break it down. Numbers, trends, connections, and yes, what it means for you, your family, your job. Because energy, it's not just a bill, it's the base, the foundation. When it shakes, everything above shakes. Pause here. Consider this. If the crisis was over, why does your bill still feel like a quiet reminder? Let's go step by step. You see, this is not about blame. It's about understanding, so we can see clearer. Now, let's set the context. What happened before 2025? You remember 2021. Gas prices started climbing. Not crazy yet, but up. TTF, the Dutch hub, went above 50 euros per megawatt hour early on. Then 80, 100. Demand bounced after COVID. Asia pulled LNG hard. Europe's storage, low. Nuclear offline in France. Hydro weak. But the system, it held. Pipeline gas from Russia, steady at 155 billion cubic meters in 2021. Norway, 114 billion. Algeria, 30 billion or so. LNG, around 80 billion total. Mix worked. Prices high, but manageable. Then, 2022, the shock. Sanctions. Nord Stream damage. Prices exploded. TTF hit 345 euros per megawatt hour in March. Demand crashed. From 415 billion cubic meters in 2021, down to 325 in 2022. Industry cut back. Households turned down thermostats. Power sector leaned on coal where it could. Survival mode. 2023. Bottom. Demand 310 billion cubic meters. Prices cooled to 40 to 50 euros average. But bills, they stayed high. Tariffs baked in the panic. Subsidies kicked in. Governments spent billions. 2024. Slow climb out. Demand up to 330 billion. Prices around 30 to 40 euros. Storage hit 95% full by November. Relief, but fragile. And now 2025. The numbers, let's look close. First half, gas consumption up 6.5% year-on-year. IEA says, electricity sector drove it. Lower wind and hydro. Colder Q1. LNG imports, but record 92 billion cubic meters first half, up 25%. All-time high. US, 56% of that. Qatar, Algeria, but Russian pipeline, first 11 months, 16.3 billion cubic meters. Reuters, up a bit from last year. Full year, under 18 billion, from 150 to 170 in good times. Fragment. Turkey, Russian gas 22 to 24 billion, up slow. Serbia, others, western direction, 40 to 42 billion total. You see the shift? Old Center Europe. Now, East Poles, China, 38 billion pipeline 2025. Power of Siberia ramps. Far East route online soon. Plan 50 billion next year's. Then 56. Without Siberia too. So, Europe loses bargaining. Asia gains. Pause. See pattern? Europe, not main buyer. Game changes. Breathe. Feel the weight? Good. Let's go deeper into supply. EU imports 2025. Total gas around 340 billion cubic meters. Demand up slight from 330 in 2024. LNG, 120 billion forecast full year, up 5%. IEA Gas 2025 report. US dominates 56%, from 45% 2024. Qatar 15%, Algeria 10%. Others fill, pipeline. Norway 110 billion, stable. Azerbaijan 10 to 12 billion. Turkmenistan, small. North Africa, steady. Russian pipeline, that 16 to 18 billion. LNG Russian, 17 billion, first 11 months. 13% total imports, up 7% first half. IEEFA, despite ban talk, loopholes, swaps, third country washing. India refines Russian crude, sells diesel back. Extra margins. You pay. Prices? TTF December 15th, 27.55 euros per megawatt, down 0.48%, day, 12.31%, month, 30.21%, year. Trading economics. Historical high, 345, March 2022. Now, stable, but double 2019's 12 to 15. Household electricity, 28.72 euros per 100 kilowatt-hour first half. Taxes, 27.6%. Up from 24.7% H2 2024. Eurostat. Germany highest, 38.35. Hungary low, 10.40. But average, up 20 to 30% since 2019. Why? Spot religion. No ceiling. Panic bleeds tariffs. Storage. 83% full, October 1st. ENTSOG. 72% November. Below 90 target. ING. Mild winter helps, but lag. Industrial production. Euro area up 0.8% October month-on-month. 2.0% year. Eurostat. Energy intensive, up 0.1% September. Destatus, but down 1.2% August euro area. Chemical steel double digits drop. Overall, weak recovery. You see, demand bounces low base, not strong growth. System fragile. Now, data deeper. Russian exports. Pipeline EU, 16.3 BCM first 11 months. Reuters. Full year 18 BCM, down 44% from 2024's 32 BCM. Turkstream, 13.8 BCM first 3 quarters, up 7%. Power Siberia China, 38 BCM 2025. Plan, 50, next. Siberia 2, talks, but East focus. LNG Global. Supply up 5%, first 3 quarters. 20 BCM. IEA. U.S. production 3% up. Europe imports up 25%, H1. 92 BCM record. Full year 120 BCM. But Russian LNG EU 13%. 17 BCM first 11 months. Up 7%, H1. IEEA 4.5 billion euros first half. Despite phase-out 2027. Short-term contracts June 17, 2025. Run April 25, 2026. Long-term January 1, 2027. Pipeline September 30, 2027. Provisional deal December 3rd. Council Parliament bans stepwise. But 2025 still flow. Demand EU. H1 up 6.5%. Full year plus 3% forecast. IEA. From 330 BCM 2024. But OECD Europe -8 to -10% 2024 to 2030. S&P. Ember -7% 2030 to 302 BCM from 326 2023. Power sector down 25% 2030 versus 2024. 30 BCM less. Industrial, stable slight up, but energy intensive weak. Euro area production up 0.8% October, but chemical steel down double. Eurostat. Prices TTF 27.55 December 15. Down 30% year, but upside risks. Middle East, China competition, AI data centers, cold snap, IEA. 2026, Europe LNG demand -2%, global +2%, supply +7%, 40 BCM. US, Canada, Qatar lead. Russia constrained sanctions, Ukraine transit end. UC connections, demand drop not green triumph. Crisis forced, recovery weak. Supply tight. Politics, noise. Pause here. See pattern? Let's go deeper. Analysis starts with broken model. Pre-2021? Simple. Pipelines, Russia, Norway, Algeria, LNG balance. Stability premium. Long-term contracts. Industry plan, 20 years. Power, steady. Households, predictable. Liberalization. Brussels unbundling hubs, TTF. Competition. Kill oil index. Thai spot. Sound smart. gas on gas. But, spot no ceiling, panic vertical, 2021 test, Asia pull LNG, storage low, TTF 50 to 100. Old contracts saved. Spot chunk, casino, marginal price sets all, power grids follow, retail baked trader fever, 2022 shock, sanctions Nord Stream damage, TTF 345 March, demand crash 415 to 325 BCM, households down thermostats, industry cut, coal lean, survival, 2023 bottom 310 BCM, prices 40 to 50 average, subsidies billions, 2024 climb 330 BCM, 30 to 40 euros. Storage 95% November. Relief fragile. 2025 up 3% forecast. But scale? Bounce low base, not recovery. Pre-crisis 415, now 340. Gap 75 BCM. You see? Drop not smart savings. Weak economy. High prices kill. Decarbonization 30% 2005. Deindustrialized. No factories, no emissions. No jobs. Pause. Consider. If bill destroys factory, close love climate, numbers don't add. Prices drop bit, start again. Weak, nervous recovery. One winter away, shock. Breathe. Feel weight, good. Supply, deeper. EU imports, 340 BCM 2025. LNG, 120 BCM up 5%. US, 56%. From 45 2024. Qatar, 15. Algeria, 10. Pipeline Norway, 110 stable. Azerbaijan, 10 to 12. Turkmenistan, small. North Africa, steady. Russian pipeline, 18 BCM full year. LNG Russian, 17 BCM first 11 months. 13% total. Up 7% H1. 4.5 billion euro first half. EEFA. Ban 2027. Short-term April 25, 2026. Long-term January 1, 2027. Pipeline September 30, 2027. Provisional December 3. But 2025 flow. Turkey, Russian 22 to 24 BCM. Serbia, others. Western 40 to 42 BCM total. China, 38 BCM pipeline. Power Siberia ramps. Far East online. Plan 50 2026. 56 later. Siberia 2 talks. East pull. Europe loses bargaining. Asia gains. Global LNG supply up 5% first 3 quarters. 20 BCM. IEA. U.S. production 3% up. High prices. Demand abroad. Europe imports up 25% H1. 92 BCM record. Full year 120 BCM. But Asia flat. China LNG imports plummet, domestic up, weak demand. 2026 global demand plus 2%. Asia 5%. Power sector. North America plus 0.5%. Europe minus 2% renewables. Eurasia plus 3% weather. Africa, Middle East plus 3% industry power. Supply plus 2.5%. LNG plus 7% 40 BCM. US, Canada, Qatar. Russia constrained, sanctions, Ukraine transit end. You see? Europe tight. Asia rebound. Competition cargoes. Now power not just gas. Separate? No. Connected system. 2009 to 2021 EU wind solar up. Share electricity production lot. But 4 states full coal shut. Others cut aggressive. Germany nuclear 0 from 22 gigawatts. Wind sun replaced. 1 gigawatt nuclear, not 1 gigawatt wind. Nuclear 80 to 90% year. Wind Europe 25 to 30. Solar 12 to 18 region. Shut 22 gigawatt nuclear. Replace energy. 80 to 90 gigawatt wind. Plus backup, stronger grids. Store. Did build 80 to 90 extra wind grid storage time? No. Added lot. Gaps. Coal cut. Gas steps. Imports. Demand cuts. Weather hope kind. Energy system 3 unstable. Weather. LNG spot. Political moods, Brussels suppliers. Cold, windless winter. Power demand jumps. Wind drops. Heating more. Industry more. Gas plants carry. Demand spikes. Price follows. Hot, windless summer. Air conditioning. Same gas. Asia, high demand. LNG projects delay. Fight spot cargoes. Ugly, fast. 2021 light version. Test. Structure fragile. Shut more coal nuclear. Tide weather more. Crisis not one-off. Built system shape. You see? Political noise kills long-term stability. Slow, effective. Breathe. Go scenarios 2026. Not hope. Corridor. Soft one. Global gas supply bros planned. New LNG trains start. Pipeline. Ramp. Asia demand 1 to 2% more. Weather average. No cold winter. Super hot summer. Prices similar 2025. Bit lower. $300 1,000 cubic meters. Spikes, dips. EU demand climb little. Another 10-15 BCM. Industry more. Power 2. Households watch wallets, less fear. Planned cut Russian transit mid-2026. Sanctions contract expiries. Painful, not fatal. Other supplies, storage demand, management balance. But other scenarios. Weather shock. Cold windless winter 2026-2027 Europe. Mix bad winter, hot windless summer. Asia high demand, heat droughts cut hydro. LNG pulled directions. Spot prices jump normal again. Europe sharp spikes. Not insane 2022. Enough break fragile industries. Political pressure. Government's subsidy schemes. Bills partial socialized. Public anger back. Lacks stable pipe. Russia bites hardest. No flexible tap. Fight spot market everyone else. Policy clash. Brussels holds 2028 full ban Russian gas. Extra limits 2026. Green build-out grids storage lag. New wind, solar grows. Wires batteries not pace. Regions more hours renewables produce system not take. Curtail part. Frill away. Other hours little wind, sun need gas imports. Worst both worlds. Pay renewables backup grid repairs. Exposed gas volatility. People see bills, ask what win here. Even no big weather trust energy policy erodes. Trust erodes, investment slows. More problems later. Spiral. You see? 2026 not 1 year gas. Locks structural change. Breathe. Who gains loses cold. Winners US LNG companies, traders move cargoes. Norway, stable pipe, good prices. Global trading houses, profit, volatility, chaos, margin, smart logistics. Asian buyers negotiate long-term deals. Europe loud spot freedom. Losers. European energy-intensive chemicals, fertilizers, metals, glass paper cannot live high, unstable gas power. Some closed moved US, Middle East, Asia. Households, poorer states, higher bills, taxes, plug holes. Small, medium firms cannot pass costs customers. Political cost. People feel energy, heating, transport, food expensive. Told, success story, gap, propaganda, life grows. Gap expresses elections, protests, quiet disengagement. Energy, not one sector. Base everything. Unstable, economic model shakes. Industry invest billions, new plant Europe. Check CO2 gas power price history. See spikes, political bans. Think twice, 3 times. Go elsewhere. 2026, 2030, public money not new schools, hospitals, energy grids, subsidies, compensation, green support, defense, same time. See budgets already. You. Bill gas power, not old normal, 10, 15 years ago. Even calm years, new normal, higher. Country pay more energy security, investment. Part needed. Part cost past bad choices, political games. Job industry, transport, farming services, high energy use. Risk another price shock. Company, less buffer. Pissed? Good. Ask, for whom works, who pays. Breathe. Tie energy, everything. Gas power, not separate. Connected. 2009 to 2021 EU wind solar grid. Share electricity lot. 4 states, full coal shut. Others cut aggressive. Germany nuclear 0, 22 gigawatts. Wind sun replaced. Remember, 1 gigawatt nuclear, not 1 gigawatt wind. Nuclear 80 to 90% year. Wind Europe 25 to 30. Solar 12 to 18 region. Shut 22 gigawatts. Replace energy 80 to 90 gigawatt wind. Backup wind? Not there. Grids move power, windy, calm zones. Store. Build 80 to 90 extra wind grid storage time. No. Added lot gaps. Coal cut. Gas steps. Imports. Demand cuts. Weather hope kind. System 3, unstable weather LNG spot. Political moods, Brussels suppliers. Cold, windless winter power demand jumps. Wind output drops, heating more industry. More gas plants carry load, demand spikes. Price follows. Hot, windless summer air conditioning. Same gas. Happen Asia, high demand LNG projects offline. Delay competition. Cargoes ugly fast. 2021 light version test run. Structure fragile, shut more coal. Nuclear, tide weather more. Crisis not one-off accident, built system shape. Political noise kills long-term stability, slow, effective. UC connections. Demand drop, not green triumph. Crisis, forced recovery, weak supply, tight politics, noise. Pause. Consider. Ordinary person, Vilnius, Berlin, Milan, Warsaw. You, family, job. What mean? Bill, gas, power not return, old, normal. 10, 15 years ago, even calm. Years, new normal, higher. Country pay more. Energy security, call, investment. Part needed, part cost. Past bad choices, political games. Job, industry, transport, farming, services, high energy use. More risk, another price shock. Company, less buffer. Public money 2026 to 2030. Not new schools, hospitals, energy grids, subsidies, compensation, green support, defense. Same time, see budgets already. You, bill gas, power, higher. Taxes, defense, lost job, local factory. Pissed? Good. Ask crisis OVO plan works. For whom pays? Gas power story, not clean. Success mix, partial adaptation, partial denial, long-term risk. 2026, show if Europe uses calmer time. Build real resilience, grids, storage, balanced generation, polish story, push bans further. See more solid long-term contracts, reliable suppliers, smarter timing, green builds, serious money grids, storage, worst part crisis, slowly behind. See more ideology, more bans, more bets, spot markets save, chronic disease stay, maybe worse. Systems not care speeches, care flows, capacity, reserves, demand, price signals. Ignore while not forever. Systems run on facts and choices, not wishes. Ordinary people feel the outcomes first. If this analysis makes you see clearer, good. If not, the trends will play out anyway. Thank you for watching. Take care of yourselves and your loved ones. And remember, data doesn't lie. Decisions do.